chart of the day, it's Qualcomm. Those shares are higher after beating earnings. Jimmy, you own it. There's a nice move there, 6%. You talked about this the other day. I know you love the stock. Now what?
First off, a little bit of humility. This stock is not where I thought it was, and a year ago I was quoting for it to be much higher. Folks, I'm sorry about that. I do think it's going to get there, but what happened was this smartphone cycle took a downturn that was longer and deeper than expected. It looks like that downturn is ending. By the way, this does portend well for Apple tonight, but I don't want to jinx it by saying that. Here's what's happening. It looks like the smartphone cycle has bottomed. Now, for Qualcomm in particular, that is 80% of its revenue, but a good 22% of it is automotive and Internet of Things, which is why I really like this stock. It's not just going to be about smartphones. It's not just going to be about that cyclical sector of Apple that we were talking about earlier. On top, so you're not out of the woods yet, though, because this is one good quarter. You need a string of a couple of good quarters here to really feel positive about it. But I do like that diversity into Internet of Things and automotive, as I said, and I have to point out it's very cheap. They're buying back shares. Almost no debt on the balance sheet on a net basis. It seems very easy to own and buy Qualcomm here to me.
Okay. CFRA, Josh says buy Berkshire ahead of earnings.
Wow, it's really going out on a limb. My favorite thing about being a Berkshire shareholder is they report earnings on like a Saturday. And they really don't play into any of the festivities or the fanfare. Look, Berkshire has a lot working in its favor, but then also a lot working against it. So we'll start with the against. Basically, a huge part of the business is utilities. And this has been the worst year for utility equities, maybe that I've ever witnessed since I'm alive. On the positive side, though, all of their consumer-facing businesses seem to be in good shape, and half the stock portfolio is Apple, which if Apple holds up, so I think insurance next year is going to be a better business than it was this year. Insurance had a lot of challenges this year, but a lot of those challenges then become easier comps for them to hurdle next year. So I do agree with the call, and if you're going to be in insurance, I want to be in property casualty more so than I want to be in other areas. So I like it. I think the stock gets close to a new high. These guys are 100 years old now running the business, so maybe that's a risk factor in the near term, but I would ignore that.
Jimmy, you own it too?
I do love Berkshire Hathaway. It's the U.S. economy, basically, maybe a little overweighted towards financials. To some of the points that Josh is making, let's just start on insurance for a second. The quarterly report is probably going to be lousy. Most of the P&C insurers did not have a good quarter. Yep. That's not the point. If you look at the P&C insurers' stocks, they're rising. Why? Because the future looks good as premiums catch up with losses. And ultimately, what you're looking at with Berkshire is the U.S. economy, whether it's utilities, whether it's Burlington Northern Santa Fe, the railroad, whether it's energy, it is the U.S. economy. Everybody knows how I feel about it. Yeah, it's going to slow down from 4.9%, but we're going to keep growing.
They've done some really hard work introducing the bench and putting these guys front and center. And one last thing, the Acquired podcast, one of the best business podcasts ever, they had Charlie Munger on for an hour. And again, he's turning 100 years old, I think, next month. So it's a really, if you have an hour this weekend, listen to the Acquired podcast, listen to Charlie talk about the Japanese investment they made and a lot of the more recent stuff that Berkshire has done.
Stock is down.
Good chart.
Stock's down 7.5% since all-time high on September 19th.
Yeah.
Just noting. I'm sorry, you said?
I think where it is right now, it's a good place for the stock to be.
By the way,
set up pretty well.
$150 billion in cash. Yep. They're earning more money on that cash than they have in 15 years. Also worth pointing out.